What is going on, you guys, and welcome back to another video. If you are new here, my name is Brandon. As always, we do have our investing academy down below, but today I'm going to be running solo here for our portfolio series update. It's been about a month since the last one. We're sitting here in February, and if you guys didn't catch my last video, we did have our baby last week, so dealing with the newborn has been crazy. I haven't quite got the time to link up with my dad for this, but I did still want to get something out for you guys. This one's going to be a lot shorter. I think you guys might actually like it because we are just going to be going into the actual portfolio and giving you a nuts and bolts look at what is really happening. These are, of course, our two portfolios, the Wealthsimple Trade portfolio and the Questrade portfolio. What I want to first off start out with is just looking at our all-time performance. And we started this portfolio challenge, what was it? Maybe 8 months ago, 9 months ago now. I forget the exact date, but so far performance up 8%. This is something that I'm very proud about to say. We know that the markets have been shaky. We know that the NASDAQ is in correction territory. S&P, I don't know what we're at currently, but I believe we're down about 5 or 7% on the year. Our portfolio has been steady trucking along, posting a gain of just shy of 8%. This to me is what we want to have when it comes to investing in the stock market. We don't want to be riding the ups and downs. We want a portfolio that's going to be steady trucking along for us. Today, the portfolio sits at about $31,000. I am doing this during trading hours. You see it's 11 a.m. here on Pacific Standard Time. I'm actually going to be placing a trade in just a moment. But just to give you guys a top-down look at the Wealthsimple Trade portfolio, which is our more dividend-focused portfolio, you will note we do have stocks that are absolutely not solely dividends. Take Adobe as a great example, which was one of our new additions. But looking down from the top down, we own Adobe, we own Bell, up 14.5%. British American Tobacco, a stock that I talked about on the channel a number of months back that I thought was a nice value play, a good US holding that's done quite well. Keep in mind, actually, this 8% growth that I was talking about is not even inclusive of dividends. And on these two stocks in particular, we're pulling in great yields. I don't believe we touched on this since the last update, but we did add REITs in both of the portfolios. So we added CAR.UN, which is the Canadian Apartment Property REITs, a much more diversified and I would say generalized REIT compared to our next one, which we're going to be talking about in Questrade. A much more specific REIT. Nevertheless, these shares are down 2%. Clorox is our big loser in this portfolio. I believe actually today, Clorox was down 15%. So I'm going to take it that they reported earnings. I'm going to have to look a little bit deeper into this. I have no worry with Clorox as a long-term hold. It's a proven company, one that is going to be there for the long run. Absolute staple when it comes to the consumer goods sector. Should we be adding more to this? Very possibly. And in fact, I'm just going to have to do a little bit more research on my end before we do average down blindly. Probably we'd be fine by just doing that, but I do want to do a little bit more research on my end. So I'm not going to be doing that in this video. Nevertheless, these shares are down 21%, our biggest loser. CNR, Canadian National Railway, up nearly 20%. Campbell Soup trucking along, Canadian Utilities, Enbridge, all of our dividend plays here. Enbridge has done well, up 16%. Johnson & Johnson, Coca-Cola, Manulife Financial. If you guys have been following along with the portfolio building challenge that we've done here over the past 8 or 9 months, hopefully Manulife is a great example. This was actually our worst performer of the bunch. When we started this off, it was down 10-15%, and we very, very effectively bought the dip and averaged down. Not only are we pulling in a skookum dividend, we are now positive on our shares, up 4.39%. That's the name of the game with investing. Merck up 10%. Our bond fund is performing as expected, not doing all too well. But again, we do have this for a very important reason, as well as generating this income. Rogers, another stock that I've very much been liking. It was actually one of my top personal stocks to buy this year, up 9% so far. Royal Bank and TD Bank, absolutely stellar with the dividends. And Unilever is another stock that I'm very much liking. We actually just added more to our Unilever position earlier this week. But nevertheless, you take a look at how diversified and balanced this portfolio is. We have strong performance across the board. Yes, a few outliers that are underperforming, but in general, you know, when I see an 8% rate of return, that's something that I'm very, very proud about. And it goes to show just the diversity of a good balanced portfolio. Again, that's not even including dividends. And here we have $2,400 in cash ready to deploy. Now I'm going to toggle over to the Questrade account. One thing that I have learned along this journey, and it's actually been rather tough, is that with Questrade, by the way, if you like the old layout better, which is the one I'm looking at right now, you can absolutely do that by toggling to this option here, going all platforms. I've done videos on this. I'll actually link it up if you want to go back to this as well. If this is your first time seeing these platforms, I mean, these are the two that we use because they're so easy to use. They're our favorite platforms here in the Canadian market as of right now. And we do have sign up links down below if you are considering trying them. I've done a million tutorials on how to use these. Nevertheless, bouncing over to the Questrade one, the struggle I have found is having cash, enough cash to deploy into our different stocks. Every month we put in $1,000 into each of these accounts, and for some reason we've done a great job of building up the cash balance here in the Wealthsimple. But just based on how we've allocated the cash, I've found that there's been many times where I'd love to add, but we just don't simply have the cash in the right currency, or simply just the lack of cash to go in and buy. Nevertheless, we're sitting with about $900 in USD here. I'm going to toggle over to the positions tab because this is my favorite way to look at it. In this portfolio, we do have a heavier focus on US stocks. Now, granted, we do have some Canadian stocks. Here's that other REIT I was talking to you about, a much more specific REIT. It's an automotive REIT, so it really focuses on one little niche of the market. Nevertheless, it's trading flat with a great dividend yield. Our other Canadian holding at this given time is Suncor.to. This was a new addition. Very excited for this one. Hopefully, will play out very similar to Enbridge. No question, this is going to be a good long-term hold for us. We do have technically another Canadian holding here, which is our bond holding, but we can just put that aside for now. But as we see with the growth portfolio, far more divergence. We have stellar performance again out of TD, very similar. We hold in both accounts. Pfizer up 35%, Apple up 36%. Google has been a very strong performer for us, but of course we have some poor performers. We do know that Alibaba and Tencent have been down quite a bit. We made a tax loss harvesting trade, which is why it doesn't reflect here. But really where I want to be focusing in today is the Disney and Facebook shares. And Facebook, as we know, if we've been following along, had a really rough go of it. What was this? So just look at maybe a 1 month number. They basically fell off a cliff on their earnings, basically projecting some slower growth going forward. Now, this is one that I've kind of done the research on. I do want to add a nibble to Facebook. I want to add here and just bring our average cost down. I know people are kind of off the Facebook bandwagon. Apple, if you've been following for a while, went through something very similar a number of years back where growth was slowing and they didn't want to share their numbers and the sky was falling. At the end of the day, Facebook is still reporting very, very strong numbers, in my opinion. Yes, growth is not as exciting as it once was. However, I don't think that they're at the end of their innovation curve. With the metaverse on the table, it is a way that I think is fair to play. Personally, I think Facebook as a platform is going downhill, but Instagram is still doing just fine. It's more or less a stock that we've established is going to be a hold in our portfolio, and with the shares down nearly 30%, I think it makes sense to add here. And actually what I'm going to toggle over here is one of the tools that we do use. I just did a full video on this. If you guys aren't familiar with Passiv, this is completely free to use and it integrates seamlessly into our Questrade account. Again, completely free to use with Questrade users. But one of the cool tools that I use just in terms of knowing where should we rebalance, what we can see is if we go down to our model portfolios, they're going to be pretty much directly on target because we've been building this up as we've wanted, and we've gone ahead and actually set our targets for set investments or securities as well as what our actual is. And again, for the most part, we're right on line. There are a few discrepancies. So here's a good one with Facebook, and this would be very much due to the fact that we haven't built in our full position. We've been easing into this. If you actually look at Facebook, I believe it represents just a measly $700. When you look at the average size of our positions, they're somewhere in the range of 1.5 to 2K, let's say. But the stocks that we are looking to build up we haven't got our full tranches in, if that makes sense. And it's exactly for reasons like this. We don't know, we can't predict what's going to happen over the short term or medium term for that matter. And by phasing into our positions, it doesn't leave us kind of with our hands tied. We have more capital to deploy. And this is a really good example for us where with Facebook, we have a target set of about 7.5, pretty much a median across, excuse me, just the size of our holdings. And we are significantly underweight. Again, because the stock has dropped so much, we do have cases here where take Alphabet. Alphabet has done quite well. They had a great little pop over the past little while. This may cause for some trimming. And again, if we were wanting to get our fingers a little bit deeper into this, we could trim. I'm not going to worry about that right now. Another one that we are technically overweight. Oops. It just refreshed here. But another one we were technically overweight there was Johnson & Johnson. Again, I'm not going to make any changes there, but for the most part, we are on target. The stocks that I want to add to it in this video is Meta, or is Facebook. And very simply, if you've never placed a trade on this, I'm sure many of us have done this in the past. I always go up to this order entry page, and I'm just going to type in Facebook. I believe they are changing their ticker to Meta, but for now it is Facebook. We have a bunch of details regarding the quote, the bid price, the ask price. We're just going to go with a market order, and based on the math, I think we're just going to do one measly share. It'll bump us up to about $1,000 in position here. We could go more. That said, I'm not like dying to go out and buy the dip. It's not my favorite stock out there in the world, but I do think there's opportunity here to average down. Disney may be another one that calls for it. However, we do have a pretty full-sized position relative to the portfolio, and just looking at the rebalancing side of things, I think Facebook makes the most sense. So I'm just going to go ahead and place a buy order in the appropriate account for Facebook or Meta. It's going to be costing us about $256, including commissions. Gonna go ahead and click send. In a moment here, we'll have the order filled. We're going to be sending this out to our Academy students, as they do obviously know every trade that we place live. Again, our Academy is down below for those that want to be following along with our trades, unique courses and training, but that's going to be our one and only rebalancing trade for this video. And I just wanted to kind of give you guys an update. Again, I'm pretty swamped on the lack of sleep here, and I hope you guys kind of appreciate at least trying to get something out for you guys. I know we didn't have time for the Q&A segment. I know a lot of people really do enjoy that, but I do think what a lot of you guys like is just looking at the flat out portfolio. You guys want to know what stocks to buy. You guys want to know what we're doing. Hopefully I've been able to showcase that for you in this video. To me, I'm really liking how the portfolio is looking. Absolutely, we have some variance. Some stocks doing well, some stocks doing poorly. That is absolutely the name of the game. But yeah, that is going to be our quick video here for you guys. Again, if you do want to check out Passiv, like, it is a completely free to use tool. They're a partner on the channel, and it's a great example of how they can basically indicate for you where you may want to bump things up, where you may want to trim. Again, in our case, we are pretty on target, which is something that I'm absolutely happy about. But just in general, the trade today was Meta. If you guys did enjoy this quick update and you appreciate it, please do not hesitate to leave a thumbs up on the video. That helps out so much. If you're not already subscribed to the channel, take a moment and subscribe. Again, our Investing Academy is that first link down in the description below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.